Good morning, everyone. This is Nick Webb. I'm in for Dan Russo, who is on break this week. Today is Wednesday, August 22nd. Fun day in the market yesterday. Continuation of the slight upward trend, but hit a couple of milestones. Let's get to it. So, first of all, the S&P broke a record high. They eclipsed the record from January, so it's good to see that we've gotten right back up to where we were following the sort of late January, February pullback or correction even. The bull market now is tied for the record for the longest bull market ever. So that's another milestone that we hit. I think the word of the day yesterday was sector rotation. Actually, that's two words. But sectors that had been doing incredibly well, utilities and real estate recently, sort of began to pull back, and some of the weaker ones that been stars earlier in the year, but had a rough July or August, started to come back into favor. So energy and consumer discretionary sort of came back. I've got a slide on that later in the show, but when these things happen, it's a fast move. And again, it's always important to be in the right spot at the right time. You get a nice tailwind at your back. So it's something to keep an eye on, something to look at, and something to make sure you're on top of. But definitely it was a sector rotation day. One of the bigger news items that were out there, really good news for traders like yourselves. JP Morgan is coming out with a commission-free trading platform. So again, putting pressure on the overall, call it discount brokerage market. Whether it's Interactive Brokers, E-Trade, Schwab, all of them took hits yesterday because basically they're doing commission-free trading. So it allows you to trade in and out of stocks with almost no penalty, trading penalty. Not sure how they're doing it, how they're making money on it, but I'm sure they are. When I looked at the futures this morning, it was pointing to a very, very slight pullback. It could be the market sort of digesting a couple days worth of gains, or it could have been just sort of a couple of malaise over the political news that was coming out last night at a rapid clip. But whatever it actually was, my guess is you're going to have a fairly slight start to the market at 9:30 this morning. So this is the chart that shows that we eclipsed January's highs and we're off and running. Now there was kind of a mini resistance level. Actually, it was more than a mini resistance level. It had been a ceiling for a couple times where we'd sort of bumped up against that 2860 level, but we did break through that yesterday, and now it's pointing to 2,900. As I said yesterday, I think 2,900 is definitely achievable in the near future. So things seem to be moving in the right direction there. And again, I talk about it a lot, but it really is staggering. You look at that blue line, the 200-day moving average, and it's flawless in its move up and to the right, which is exactly what you want to see. So a lot of good things in the market. Again, I think you hear a lot of negatives. You hear a lot of people saying that the market's choppy or volatile. But then you look at a chart like this and you realize, wow, we've had it so good for so long, again, the longest bull market ever, that we sometimes don't appreciate what we have. And you can see what happened in January and February when you got that really quick market correction. That's normal for a market. But in 2017, we didn't have a single correction. The average is you get one or two corrections every year. 2017, flawless sheet, clean sheet, as they say. And in this year, we've had one, but bounded pretty quickly back afterwards. So market is strong. Market's been really strong. So let's take a look at the rotation. So we talked about it. Real estate and utilities had been a couple of the strong sectors for a while now that had been sort of popping up at the top of our sector chart. But they had a rough day yesterday. I think there is a sense that interest rates are on the rise, and they'll eventually really impact these two sectors. Taking their place or benefiting from this rotation was consumer discretionary, industrials, energy, all of which have had some rocky moves, but seemed like they had a good day yesterday. You know, if you hadn't had JP Morgan Chase, I would say that the financial sector would have been joining them right up there. So outside of that, those seem to be the four that are leading. And by the way, industrials and materials, they've had great earnings quarters recently. So it's nice to see the market finally recognizing them. And again, the rotation game is you got to be in the right sectors at the right time. And maybe industrials and materials, you know, I shudder with materials with all the trade wars going on, and same with industrials. But it could be that, you know, there's some light at the end of the tunnel there, and those would be in for a big pop if the trade wars got settled. So talked about it already. You can see the small caps had a heck of a day. They really took off yesterday. And while some of the larger stocks, not so much, small caps, again, big, you know, although the small caps, you know, they've had a good run, and they still are having a good run, but small caps have been lagging behind the S&P 500, for instance, and now they're catching up a little bit. So this is probably just a reversion to the mean, if you will. But it's good to see them having that kind of a performance. You can take a look at the power bars. Basically, all of them look like they're in great shape. So nothing to worry about here. There's way more bulls than bears. So all in, very good. So I love stock of the day, as people know. So today it's Telephone and Data, which they're the parent company for U.S. Cellular and other sort of cable telephone companies. And you can see they're a well-run company. The financials are strong. Earnings have been choppy. But they, if they had pulled together some better earnings quarters, this would be just an off-the-hook, very bullish stock. But their last quarter really looks strong. They were expected to earn 23 cents a share and came in at 29. So a major beat there. Money flow looks great. So the smart money's flowing into the stock. And there's one sort of item I'm starting to look at more carefully right now is there's just a ton of insider selling at this firm. So a little concerned with that. You know, as I think on Monday, I sort of brought up that there was a firm, Trim Tabs, that studies insider selling. And they said June and July were just huge months for insider selling. So outside of the insider selling, outside of the choppy earnings, this looks like a great stock. So we talked a little bit about sector rotation. You can see industrials beginning to swing to the top. Energy was much further down in the pile, even though they're at the bottom now. It's they're beginning to catch up. And real estate, which real estate and staples, which were at the top of the heap, are beginning to sort of lose their status. So you can see the sector movement. You can see what happened yesterday versus what this chart looks like. And that does tell a story of where things might be heading. So our industry focus today is biotech. And it has underperformed the S&P. There's a lot of weak stocks in that, which is not really that unusual for biotech because it's an area where there's a lot of investment, but there's not a lot of things like revenue, earnings, things that we use to evaluate the health of a company. So this is not an unusual power bar for biotech. But what I would say, and you know, there's three bearish stocks there, but you know, biotech's an interesting area. It's one that when I talk to people, unless you know a lot about a particular company, highly recommend. This is a great area that if you want to get exposure to a biotech, get an ETF. Don't invest in individual stocks here because, unless you really know what you're doing, I don't know what the stat is, but it's like 7 or 8 out of 10 are going to go out of business. So you have a really good chance of losing money in this space. Earnings, again, still winding down, but still a few things left. TJX, great quarter, real solid beat. Medtronic, real solid beat. Regis, awesome beat. They were on their game last quarter. Look at that. They were expected to bring in 3 cents, and instead they brought in 22. So that's just as a note, Regis owns Supercuts. So, I tend to go a little higher end on my cuts, but clearly people are going to Supercuts for their haircuts. Reporting today, there's a couple interesting, again, you're going to have targets and lows. I think I saw just before I came in here that Lowe's had some disappointing news, so not surprising. It'll be interesting to see where Target goes. I didn't have a beat on that before I went in. Analog devices, they come out today before the market and after the market. Synopsys, which is an interesting company. They missed badly last quarter, so if they have a good quarter this quarter, that could really propel the stock. And then L Brands, which, we're looking for some support there. They own Victoria's Secret and Pink. They typically beat earnings, but their earnings are trending completely in the wrong direction. So even though they're beating, it's lower and lower targets. So they definitely they need to freshen up their game, I think. So a lot of movement yesterday. Like I said, Medtronics, you can see on that list. Discovery had a nice upgrade from Jefferies, which propelled them. Home builders, Toll Brothers had a great report. So Pulte there, they rose in sympathy, as did Lennar. TJX, we've already talked about. They had a nice beat. On the downside, the area you don't want to be in, Cody, it's an interesting one. Their earnings were in line, so not really that disappointing. But I think that's what's going on with the market. If you just meet earnings, that's not good enough anymore. Also, their CFO is leaving. Smucker's, not a good earnings report. They got hammered, and if you go all the way to the bottom, GIS got hammered in sympathy with them. HPE, they release earnings next week, but they're getting hammered this week. That does not bode well. Usually when you see that, that's not a good sign. And for E-Trade, we've already talked about how JP Morgan basically has thrown the economics of this industry on its head, and we'll have to see how that sorts out. So those were the movers in general. You can see the sympathy moves are ones that are interesting because even, you take a company, Smucker's obviously has a disappointment, but then you feel it all the way around the whole industry, and General Mills, which is GIS, gets tainted with that brush. So it's, they did nothing wrong and yet still end up losing 3% of their market cap. So again, end of the session here. Hey, I just want to recommend everybody catch this. The last time Jim Cramer and Mark Chaikin got on and had a webinar, it was an hour. It was just a lot of fun. You couldn't believe it was over because it was so entertaining and informative. So I just want to really recommend to everybody get on that. Yeah, the way to sign up is you can go to chaikinanalytics.com/webinars. You can just scroll down. I think it's the first, it'll be the top one. Just sign yourself up. I think you'll find that it's incredibly informative. And given everything that's going on in the market right now, obviously it's a great time to get a little insight from these two gentlemen. And they're both from Philly, so they're Philly natives. And I'm sure they'll play off that. So that's it for today, Wednesday. Look forward to talking to you tomorrow. Bye-bye.